thanks to everybody who's joined today. What I aim to do today is go through, obviously, the Mt Margaret transaction, give you some more information in addition to what you would have seen in the press releases, and then take some, we'll go through some Q&A that we've received, both via your initial signing up to this webinar, submitting questions that way, and also questions I've had, common questions I've had from shareholders through phone calls over the last sort of 5 months where we've been involved in this transaction. First of all, apologies that it's taken a while for me to talk to you in this forum, but the transactions had some delays in getting both the prospectus and the materials ready. And then, unfortunately, obviously, as you're all aware, we've hit quite a difficult market at the moment. And so I've been more focusing on those parts of the transaction. I always aim to come and talk to shareholders prior to the shareholder meeting. And so that's what we're doing here today. I'll just move through now to, okay, so one of the key questions that I get is, why is the board proposing the deal at all? And so to answer that, I thought I'd just go through a few key points about the transaction. It's just maybe a little bit hard to understand from the press releases. But so the Mt Margaret Copper Project is a very advanced mineral project. It's in Queensland in the Mount Isa region. It's just near Cloncurry, and I'll show you a map regionally where it's located shortly. But what it is it's a fully developed open pit copper mine. So this did mine previously in 2013, 2014. It produced saleable concentrates at that stage. So that de-risks us a lot going back into production, which is our plan with the project. It's on permitted MLs, and then there's ELs surrounding the MLs. Now, the very key thing about having permitted MLs is that saves you a lot of time and money in going back into production. So these MLs, from the time it was mining, have been maintained in good standing by Glencore. And so once we do some further exploration, do a pre-feasibility study and a definitive feasibility study, we'll then be able to go straight back into production. The permits are already in place, including water extraction permits, tailings permits, waste dump permits. So it is ready to go back into production once we get those studies done, which we need to do before we would go back into production. So that makes it a very advanced asset. It's not really an exploration project, although we will do some further drilling. It's more a brownfields project that you're going back in to turn back on in what is a fantastic copper market in a tier 1 mining jurisdiction that already has a significant existing resource here, 13 million tonnes at around about 1% copper equivalent, and that's all open pit. So low cost, easy mining, and 95% of that is in the measured indicated categories. Now, there is a lot of resource upside to that already substantial resource. And one of the reasons we had to push the AGM back is because we want the prospectus to be out, and we want shareholders to have a chance to have a look at that prospectus, and in particular, the independent geologist's report contained within that prospectus, because the geologist has developed an exploration target which is significantly above this existing resource. And it's one of the reasons we're very excited about this project, because we can see the potential to create in a short period of time a long life mining project, as I said, in a tier 1 mining jurisdiction with copper as the predominant economic mineral in a market that we think is going to be very, very good for copper. On top of that exploration potential I'm talking about, there is also a lot of other exploration upside on the site. So there's a couple of very, very large geophysical coincident with geochemical anomalies. And when you get the two of those things together, and in particular, the way the mineralization is hosted on this project or at this project is generally within massive ironstones or magnetite. Now, magnetite responds very well to geophysics. And so having these sort of strong geophysical results, which are suggesting that there's magnetite there, with geochemical soil sampling on top of that same anomaly with elevated levels of copper and gold, provides a very, very strong exploration target. So, you know, we've got a project here that's fully permitted to go back into mining, basically, subject to some studies and some further drilling that we'll do. Large exploration upside around this existing defined resource, so this 13 million tonnes around that, very large ability to increase to increase the resource size in a quick time frame. And then on top of that, like some real blue sky, large potential exploration targets out there on top of that. So lots of fantastic things about this project, and that's why we're so excited about it. And I'll say it again, with copper as the predominant economic mineral and in a tier 1 mining jurisdiction, being Queensland in Australia. Now, we're also getting this for a very fair price, we believe. The consideration is $20 million for us to acquire the project. We're then raising money to replace an environmental bond, and there's an environmental bond on the site because it did operate in the past. So one pit was mined previously, although we believe there's further material to be extracted from that pit at current prices. 2 pits have been pre-stripped, but not mined yet. And that saves us, we estimate, sort of $8 to $10 million in pre-stripping activities should we go back into production, which is our goal. On top of that, so this project previously transacted when Xstrata purchased it from Exco Resources in about 2010, 2011. And then obviously Xstrata was subsequently purchased by Glencore, who are the vendors of the project to us. But when Xstrata purchased this project from Exco, which was in a good copper market as well, but nowhere near as good as it is right now, and they paid $175 million for this project back then, we're paying 20. And they subsequently spent $124 million developing this project, including obviously those pre-stripping activities that I just mentioned, but also they built a haul road, a 20-kilometre haul road. And the independent geologist, when he attended site, said that is being constructed to absolutely top-level standards. We estimate that's about $1 million a kilometre to build that road. So significant money spent on this project that we will benefit from when we go back into production. So whilst we do have to raise a fair bit of money right now to acquire the project and then finance the bond, a lot of money has been spent on this project. So there's going to be less for us to spend in the future taking it back into production, and potentially, as I'll discuss throughout this presentation, not much at all. As I said, near-term production, 2 pits are pre-stripped. 10.5 million tonnes of that 13 million tonne resource is in those 2 pits. We think we're going to define, as I said, significantly more resources around those pits, and so huge potential for a larger project there. And then with the slow capex pathway back into production that we're looking at here. So previously, this material, when it was mined, it was processed through the Ernest Henry plant, which is just next door. And in fact, there's 2 parts of this project. There's the E1 and the Monocroft. I'll show you on the next slide. But it's only 7 kilometres to the west of the E1 project, where those 2 pre-strip pits are. That's where the material was processed previously. Now, that plant at the moment currently has excess capacity of 2 million tonnes per annum. They are toll treating that plant and that operation. So Ernest Henry is now fully owned by Evolution Mining. They had a site visit in March, so I'm speaking from their own figures here. They said they've got 2 million tonnes worth of excess capacity in that plant. They do toll treat for some smaller customers at the moment, and per their presentation, they are looking for further toll treating material in the future. And why do they want to toll treat? Well, it defrays their costs. It reduces their cost of running that plant to run material through and charge a tolling fee to another miner. And that is a part of our plan, which is to toll treat that material through that excess capacity at the Ernest Henry concentrator to produce a copper concentrate. And that is where the material went previously, as I said. So again, de-risking us back into production by going to the same plant that successfully processed this material in the past. So there's just a lot of fantastic things about this project, and it really is the type of project that comes along once every 15 to 20 years. You get these kind of opportunities where majors are making strategic changes. In this case, Glencore is deciding to divest non-core mining assets, so it's smaller mining assets. And that creates opportunities for juniors and mid-tier companies like us to come along, take that project, and then develop it back into production. I've also had shareholders say to me, we've already got Barraba, it's a good project, and I'll talk a bit more about Barraba later on. And yes, we do, but we're talking sort of apples and oranges here. This is far more advanced. It's produced in the past. It's on permitted MLs, and getting an ML can take many, many years. So And at significant cost, you've got to do environmental baseline studies and a whole lot of other things. So this and Barraba are at different stages of their development. This has produced in the past. We're highly confident it can produce again. It's on permitted MLs. It's right next to a plant that has excess capacity. So they are different assets, different quality, different size probably. And this is the reason that this is costing us more to acquire than Barraba. It's just, quite frankly, a more advanced project. I'll just show you where it's located here. So Mount Isa, everybody would know, in Queensland, so northwest Queensland. And the project is quite close to the regional centre of Cloncurry up there. Now, this is the Ernest Henry project here. And where the little mining symbol there is, that's their mine, and their concentrator is right there as well. They're mining underground at the moment there. Now, we've got the black and white boundaries here are the EL boundaries, and the yellow boundaries are the ML boundaries. This long, skinny ML here is the ML that permits the haul road that I mentioned there that was constructed. We estimate around about $20 million, around about 20 kilometres of very high quality haul roads being put in there. And you need that up here because in the wet season, things get quite soggy in the field. So that's just money saved for us. This is 7 kilometres, as I said, and this is where it was mined previously. So the E1 project was where it was mined previously. This is where 10.5 million tonnes of the 13 million tonne resource is. The other 2.5 million tonnes is down here at Monikoff. And this is that 10.5 million tonnes again is on pre-strip pits, so saving us sort of $8 to $10 million in expense, or pre-stripping capex basically is what it would be called, should we take this back into production, which we're highly confident we can do. As I said, it's right next door to that plant, 8.5 million tonnes in that concentrator there, and they're only using 6.5 for their underground mining at the moment, so 2 million tonnes available for toll treating. And if we can execute a toll treating agreement there, or with there are other options of toll treat, also at Mount Isa Mines, it's further away, but it has capacity as well. But that saves us, you know, hundreds, probably $100 to $150 million on constructing our own plant. And again, just one of the reasons this is such a compelling investment opportunity for us. Just to give you an idea of what we might see when we start drilling on this project, and why I think the market's going to very much like the drilling results, is these are drill results in the unmined areas of the project at the moment. And we'll be drilling around all of these to increase the resource size. As I said, and once you see the prospectus and you see the independent geologist report, you'll see that he's got an exploration target, which is multiples of the current resource. And the way we're going to deliver on that is by drilling extensions of these ore bodies at depth and along strike from where the current resources have been defined. And this kind of drilling, these ore bodies are quite thick or wide. You see these intervals here. Now this interval here, these 186 and 126, it's a little misleading. That's not true width. They're steeply dipping ore bodies there, and there's sort of those drill holes are coming down the dip or down the plunge of those ore bodies. But they are, true width is still very thick, 15 to sort of 30 metres we estimate. But the other intervals here, very, very thick and at very good grades, copper equivalents largely above 1%, up to nearly 3%. And for people who more may be familiar with gold as a sort of a benchmark of how you think about economics, we've got the gold equivalents in here, and you see very, very good grades as well for the gold. And again, this is all open pit that I'm talking about here, right? So simple, low cost, open pit mining, not underground stuff. And I think when we drill this, when we have the project and those drill results are coming out, I think the markets will respond to that very favourably. So in summary, this is why the board's recommending that we acquire this project. It's a rare diamond, and it's a rare opportunity for a company like Comet to be able to acquire such a high quality project. So the company's been in suspension for an extended period, and I think there's two questions here that are sort of fairly similar. Yeah, so the company's been in suspension for an extended period, or when are we coming out of suspension, and when will we trade again? And then also, why did we go into suspension, and why did we not just continue trading and potentially benefit from the international graphite listing? So we did not decide as a company to go into suspension. Okay, whilst there was an announcement that went out where the company is requesting to go into suspension, effectively companies are instructed by the ASX a lot of the time, and that was the case. And the reason was that the ASX felt, because we were in an advanced stage of negotiation with Glencore on this deal, that they wanted to make sure the market wasn't trading on information that may be confidential. We were confident that there wasn't any issue with that, but the ASX asked us to go into suspension out of an abundance of caution, and of course we had to do that. So we went into suspension then, and since that stage we've obviously been working on the transaction. We subsequently put out the announcement. We've then had to work on getting the prospectus ready and the notice of meeting. They took an extended period of time. The ASX has been very busy. There's obviously, you'd be aware, there's been a lot of activity in the junior mining space and a lot of IPOs happening, and that creates a lot of workload for them. So the timetable that we had envisioned was delayed. And then once we got to the point where we start to go out and do the pre-marketing for the fundraising, unfortunately, as you're all aware, markets have become very difficult, and it's essentially been the wrong time to go out and try and raise the money. So that is really sort of like the summary of why we went into suspension, why we're still in suspension. Now, we couldn't elect to come out and trade at the time of the listing of International Graphite, which was early April, as you're all aware, because we were already in suspension and we had to go into suspension, as I just explained. You can't come out until you complete the transaction or until you cease trying to complete the transaction, which is not what we want to do. We want to complete it. So we're still working away at that. And unfortunately, sometimes these things take quite a while. Now, there's another, I think, misconception here amongst the shareholder base about what may have happened to our share price if we had not entered into this transaction at all, and we had simply been trading, working on Barraba and our other projects, and International Graphite listed. Now, there's some feedback that I get that people think our share price might have gone to, from 2 cents to 4 cents or 5 cents or whatever. Well, first of all, International Graphite shares haven't done that. So they're at around about 30 cents at the moment, which is very good in this market. And I'm personally very confident that International Graphite are moving in the right direction. But you simply don't get look-through value in a junior mining company because of your investment in another junior mining company. Okay, like look-through value happens in large funds where they invest in BHP and BHP goes up. It doesn't happen in this case, and I could give you multiple examples of small companies that have both cash on the books and investments in other mining companies. If you add up the value of everything, it might be worth $30 or $40 million, and they're trading at 8 to 10. And the reason is that junior mining companies trade on their own projects and the news flow about their own projects. So I think it's a misconception that the share price would have gone up substantially because of International Graphite. It just wouldn't have. Where we will get value out of International Graphite is in the future. Now, our shares, the company shares, are escrowed for 24 months. That's an ASX rule. And should International Graphite successfully execute their development plans, those shares should be worth considerable money. And at that stage, we can decide what to do with those shares, whether we sell some of them to fund development of a project, or whether we do a distribution to shareholders, or whether we do a combination of both. And at that time, that's when we get value out of International Graphite. And so maybe some people say, well, why did you do the deal at all? Why didn't you do it yourself? Keep the project within us. As I explained at the time, it's very technical graphite. You need the right team. We didn't have that competence in Comet, and it was going to be undervalued in Comet. The best idea was to put it into International Graphite, which we did, and shareholders voted to approve that. So we just have to wait though with International Graphite. Now, the other thing about being in suspension at the moment is obviously the market has been extremely choppy, and whilst I understand that everybody wants to have the ability to sell their shares if they choose to do so, if you had to be suspended, now is not a bad time to be suspended. The market has been dealt some fairly brutal sell downs on a lot of juniors, and pretty much everything in my portfolio is down 30 to 50%. So I think if we were trading at the moment, we'd probably be in the same basket as every other junior. So being suspended now, at least our share price is still at 2 cents. So when we complete this transaction, it will be based off that valuation. This is just here, material acquisition here. As I said, this is the announcement I referred to, the ASX request we put out. I've been asked, what's the board and management shareholding in Comet, and also why are we not investing in the business? At the moment, Hamish Halliday, our chairman, he has a significant amount of shares in Comet. Alex and I have been with the company for less time, and there hasn't really been a large fundraising. We've done smaller fundraisings, and generally the board elects to allow, to do those raises, without us taking a large amount of shares. Now, we are all investing into the company for the Mt Margaret deal. We're all very confident about this deal, confident about the asset, as I said. So we are all investing a significant amount of money, or we're proposing and requesting shareholder approval for us to be allowed to invest in that. This is a common question as well. Why were shareholders not given a priority offer or a rights issue to participate in the Mt Margaret deal? Now, I admit when I'm wrong, and on this one, I got it wrong. So my thought process was, this is a large raise. We're raising $50 million. And the simple fact is, you can't raise $50 million off a $13 million sort of share register, because you'd be asking every single shareholder to participate 3 times their money, basically, to raise the $50 million. And that just doesn't happen. Now, it's not our intent that shareholders can't participate. And we encourage shareholders, if they do want to participate in the capital raise, and we will give you a priority allocation, even though it's not a formal priority offer. But I understand that visually that didn't look good. And as I said, that's my fault. Moving forward, I've taken that on board, and should we do any other transactions in the future, I would include a rights issue or a priority offer to shareholders to allow you to participate if you want to in the project we'd be raising money for at that stage. So I've taken that on board, feedback received. Now, just before I go over a summary of the key points there, I just wanted to talk, I forgot to put a slide in here on Barrow, because I did have quite a few questions on Barrow as well, where people were saying, essentially on the lines of, why don't you just go and drill Barrow, or, we've had Barrow forever and we've done nothing with Barrow. Now, obviously we got the Barrow project a bit over 2 years ago now, and it was our intention at that stage to be drilling it pretty much the quarter after. The vendors we purchased the asset from at that stage had contact directly with the traditional owners of the land there, because there is a native title claim over Barrow. And in the past, they had direct contact with them, and we were fairly confident that we'd be able to negotiate exploration access. In the intervening period, they appointed legal representation. And then also we had the whole COVID situation, which traditional owners were deemed to be higher risk cohort. And so they couldn't come to the cities for meetings with their solicitors. And then also just the involvement of solicitors in the process generally, unfortunately, slows things down. Now, we could not find a pathway through with the solicitors and the traditional owners. And so we were left with no opportunity but to go to the National Native Title Tribunal, who essentially arbitrate on disputes related to native title matters and access for exploration, where there is a native title claim over the licence, as there is at Barrow. Now, that process took us months, and we finally prevailed at the Native Title Tribunal in very, very late March, very early April of this year. After that, we had to then go to the Minister in New South Wales, the Minister for Mining, and get him to register ministerial consent of that National Native Title Tribunal ruling. And then after that, and only after that, can we then submit a drilling program. So that has been submitted, and we're just hoping very soon, in fact, to get permission or approval there for our drilling program at Barrow. So I would just say that, yes, we do intend to still explore Barrow, and there maybe is a misconception that we've been sort of sitting on our hands and not doing anything, and that's wrong, because We had to find a way through this native title process. It was difficult, so difficult that we had to go to the Native Title Tribunal. And so we've followed the process and we've come out the other end. Unfortunately, sometimes these processes do take a long time. In this case, it took around about 18 months. But we're there now and we will be exploring Barraba moving forward. Didn't have a slide in there, but I did get questions on that. I forgot to add it to the presentation. So just summarising on Mt Margaret again, though, this is a fully permitted MLs and ELs, significant money invested in it in the past, last transacted for $170 million odd. Xstrata and Glencore spent $124 million on developing the project. It's produced previously. It's right next to a plant that has 2 million tonnes of capacity, which would be plenty. We don't even need all of that actually. And we could through contract mining have a pathway back into production that is very, very low capex. And once we get to a DFS, we'll be able to debt finance that bond that we're cash backing at the moment and bring that cash back into the business. So you may see a situation here where there's little to no dilution on moving back into production. And I just want to speak about dilution again here, because dilution has been something that also comes up a lot from shareholders. And the thing is, yes, there is dilution in this transaction. There is dilution though for any junior that moves from exploration through to production. And there's a lot of dilution. That is the nature of the game in mining. Now, we're in some ways sort of doing things a little bit backwards here, in that we're raising a lot of money at the start and then bringing some of that money back into the business once we do the DFS. But that's just the nature of the transaction structure. I can't change that. But at the end of the day, there's always going to be dilution taking an exploration asset into production. We're just sort of biting the bullet on that dilution to a large extent right now. But there is a pathway here back into production that could involve very little dilution. And if you don't have to build your own plant, and if you contract mine, and if you're in a region where all the infrastructure is already in place, you don't have to build roads or railways, that's all there. This project really stacks up in so many ways. And I think, and this is my fault, I haven't maybe communicated that well to shareholders, but that is the reason why we jumped on this project when we got the opportunity. That is the reason why we're still persisting with this project, because it is a project that in a couple of years' time, potentially, could be back in production in a very good copper market. And you all as shareholders could be sitting there receiving dividends from an income producing mining company. And ultimately, at the end of the day, that's the goal for all exploration, is to bring projects into production, And you see a lot of companies that have early success in drilling and then go nowhere, because as they move through those processes and studies to develop the project, they find out there's some kind of flaw. Either it's too expensive to build the road or the rail to the port, or the metallurgy doesn't stack up. Lots of reasons projects can fail from exploration through to production. In this one, it's already produced in the past. It's in an area that has a lot of investment done. And as I said, has a clear pathway back into production through drilling around existing resources, producing a new resource, new dual compliant resource. We believe will be substantially larger, doing our PFS and DFS, and then getting back into production. So it is a rare find, this project, and I just hope I've explained that to people, because internally we're extremely excited by it. They don't come along very often. So look, I think I'll stop there. I can see some questions coming up. So maybe I'll just ask Evie to ask me some of the questions, and we'll take those.
Thanks, Matt. That was a great update, very honest and frank. Look, there has been some questions that have come through, most of which you have already addressed. The two that I can see on here that haven't been covered, I think we'll start with the Santa Teresa gold project and why that wasn't announced to the market.
Okay, so look, the Santa Teresa gold project was announced to the market. It was announced in our half-yearly financials. And obviously there's been a question came from a shareholder, I believe, to the ASX, and the ASX followed up with us, and we've issued a clarification to that. So, but the rationale for why it was disclosed in the half yearly is it was, as explained in our response to the ASX, it was as a result of the process we went through in the half yearly that we determined we couldn't move forward with the project. Now, when we signed the agreement to acquire Santa Teresa, it was staged into 2 tranches. We acquired 50% upfront, and to acquire the balance of the project, we had to, within 2 years, which is August this year, we had to make a decision to mine. Now, we did an initial drilling program last year, and whilst we did get some good holes there, it wasn't enough that we could move that inferred resource into indicated, and it wasn't enough to really give us confidence to expand the resource either. And on the basis of that, we didn't have support to raise more money to go back and drill it again. And then we had this time constraint. We have to make a decision to mine by August in order to buy out the balance of the shares. And we just could not make that decision based on the information that we had, which was available when we purchased the asset, plus the information that we got from the drilling program last year. So we had to make the decision to elect to not acquire 100% of the project and instead just revert to getting a royalty. And so that's what we did. We disclosed it in. And because that whole decision-making process was crystallised by the auditors asking us, because every time you go through a financial review, be it a half year or full year, there's a process called impairment testing, where any of your assets, they test their market value. Are they still worth that much? And in this case, they said, okay, you've got capitalised assets for the Mexican project, but you have to move forward with this transaction by August. And if you don't, you go to an NSR. Are you moving forward? And so we examined that in detail at that stage and made that decision then. And that's why it came out in the half yearly and not a separate press release, because the next disclosure document that went out was the half yearly, which is a disclosure document as well. So, but anyway, I hope that explains everything.
Thanks, Matt. I'm pretty sure it has. And there's just one other question. I'm not sure if you can answer this. You might need to get back to this one. The IG6 shares are in escrow for a period of time. Has it been considered that after the escrow period, the IG6 shares should be distributed to existing shareholders before the massive dilution takes place? Some people purely invested in Comet for international graphite exposure.
Okay, so yeah, so I can't do a distribution of the shares to shareholders at present pre this fundraising because we are locked up for 24 months. That's an ASX rule. So if we go forward with this transaction, then the dilution happens. It happens now. You know, I think investing in Comet to get exposure to international graphite, if you really want exposure to international graphite, it's really best to invest directly into international graphite. So Comet has some nice exposure to international graphite, but if you're 100% bullish on international graphite, I recommend you buy some shares in international graphite directly as well. So the answer to the question is I can't do that. It's just not permitted by the ASX guidelines. So.
Thanks, Matt. Just one more before we wrap this up. Just from Paul Van Beek, cost of the project 20 million and 32 million rehab, which equates to 52 million. Fundraising is 50 million. That leaves a deficit. What money is left to go forward? Okay, all right. So the 20 million that we're acquiring the project for, we're acquiring by issuing shares. So we issue shares to the vendor of 20 million. We then raise 50 million. 32 million of that goes to the bond. And then we have 18 left to pay transaction costs, broker fees, et cetera, et cetera. We'll be left with around about sort of $12 million. And $12 million is more than enough to get us through 2 years and to get us through multiple drill programs, a revised JORC resource, then the PFS study and the DFS study. So we would be financed, and our plan was that we would be financed all the way through drilling and studies up to the point where we're going back into production. So yeah, so realistically, the whole, I guess, transaction is 70 million, not 50. There's 50 a cash raise, and then there's 20 being issued in shares. Thanks so much, Matt. I think that'll wrap it up. If we didn't get back to you, I'll make sure that Matt responds to your questions via email. Thank you very much. Have a great day.
Thanks, everybody. Bye.